Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Joseph here for Tackle Trading to record the market recap video for Monday, the 5th of October, 2015. And what a day in the market it was. Big up day in the market coming into resistance areas. Now, just kind of looking back to last week in the market, last Monday in the market, I was looking at the marketplace coming down into 1870, 1865. I said that's a make or break zone for the short-term direction in the market. If it cannot break it, expect a short-term bounce. If it breaks it, expect some more volatility to the downside. We saw a little bit of a narrow body candle coming into last week, upward movement in price, and obviously it responded up. Now, for those of you who have been a member of Tackle Trading or Legacy Education and been a part of our community for some time in the past, you know what market environment we're living in. We're living in a market environment where all bad news is good news and good news is bad news, and that's just what the Fed has created in this market environment where everything is interest rates driven, quantitative easing driven, and it really started not Monday or Tuesday, but really the make or break in the short-term market was last Friday. You had the unemployment report that came out with its report on Monday, and let's look at that price movement very quickly because it was really kind of interesting to see this price movement. Initially, right when the unemployment report came out, you seen this massive movement to the downside. Just from the very beginning, up here around 1930, all the way to an hour later down to 1885. You're talking right around a 45-point movement, a 2% movement in the market over an hour. And the unemployment report was not good. It was really, really bad. It came in at 5.1%, but that obviously doesn't tell the whole story. We had initial claims we had new jobs that was not nowhere near where we were expecting in 200,000. They came in right around 140,000. You also had hourly earnings, which did not go up. It went down. And so what the word just started happening last Friday was basically that, hey, listen, if the marketplace is that bad, if the economy is that bad, if everything out there is that bad, then obviously the Fed's not going to raise rates. And I made this statement on the Coaches Show last Tuesday. I talked about it on Monday. I talked about it in a podcast. I do not see the Fed raising rates in this environment. I do believe the Fed is lying. They're not going to raise rates. The bears are controlling them. Anytime they talk about raising rates, they sell it off, and then they pull back on the brakes. A little. Even Ben Bernanke, who should be on his speech tour promoting his book, is now saying, hey, you don't have to go too fast in the raising rates. You're right. It's only been 9 years. But the point remains that when the economy is bad, they're not going to raise rates. And they've been saying that the economy has been coming back. It's been coming back. It's been coming back. Well, if it was, they would have raised rates already, and they're not going to do it in October or December. I don't see them doing it in the first quarter. You're talking maybe late first quarter, early second quarter at the earliest of 2016 if they do that. And so the marketplace understands that, and they just start buying. And we're about 100 handles from the low of the unemployment report just last Friday. That's only 2 market days. You're up literally 100 points in the marketplace over that time frame, a dramatic move in the S&P 500, and it's all due to basically the economy being that bad that interest rates are not going to be increased. And we know that if there's one thing that the financial markets love more than anything else, it is the fact that interest rates are cheap, free money, quantitative easing. Even today at the ISM non-manufacturing report, that came in at a negative 56.9. The forecast was 58. That's negative. Market responds positively to that as well. And I know as a new investor, new trader, that doesn't make any sense, but it's the reality of the situation, and that's why price action is king. Now, just like I said last week in the market where that 1865, 1870 level was so important, I'm going to say the exact same thing right now for resistance. You have resistance right here at about 1890, and then you have the significant whole number of 2000. If those levels are punctured, if they are broken, expect the market to come back up into the 2040, 2045, 2050 level fairly quickly. And you're going to be seeing headlines galore. Oh, market's market's bullish again, market's bullish again. No, that does not mean it is bullish again, ladies and gentlemen. In fact, if you put this on a weekly chart, you're going to notice something that if it does break these levels on the short-term trends, it's just going to come right back up into a potential kiss of death pattern, which is not a very good pattern for the financial markets as a whole. That is a very, very powerful reversal pattern. And we talked about that on the Coaches Show last week, where we're saying, hey guys, listen, the make or break is not on a daily chart. You're going to see up, you're going to see down. The make or break is on a weekly chart. And I even said this last week that I'm not looking at this level from a long-term perspective. I'm looking at this level up here from a longer-term perspective. That is the make or break zone, is up around the 2030 to 2050 area where you potentially have a kiss of death. This market is not bullish in my capacity until the market gets back up above major resistance levels and we start seeing higher highs, higher lows on the daily chart. And right now, if it breaks out of the short term, then yeah, I think you could say short term you're slightly bullish, but I still want to keep it back in our mind that right up into these levels up here, it has a potential kiss of death pattern forming in the future. We made a statement last week on the Coaches Show where, it's not about the next day or the next week, it's about the next quarter. Coming into the last quarter of this year is very, very important. All indexes are still showing red for the year. They're getting very close to the break evens for the year, but it's still been an abysmal year for the financial markets. The next quarter is going to show us a lot about what the market thinks about coming into 2016 and the election cycle of 2016. So keep that in mind as we're looking at our long-term investments. You never, again, always compare daily charts versus weekly charts as well. Very quickly, let's look at crude oil here. As we talked about last week on the Coaches Shows and in Tim's commodity report, still in this neutrality, 44 to 47, 47 and a half. As long as it stays in that neutral pattern, we're not going to be doing anything. If it breaks down out of that 44 mark, I will get bearish on crude as again. The dollar, I said last week in the Forex report and Coaches Show that I expect a little bit of downward movement. We certainly got that downward movement on the unemployment report coming in on Friday, rebounded like everything else, and now you're basically break even for the week since last week until today. Looking at some more neutrality on that. Gold showing some negative behavior, but you do have a short-term neutral pattern in gold. The number one tradable instrument in the world, the euro dollar, straight up neutral right now. And then on the VIX volatility index broke down underneath $20. I do believe that is significant, showing that the market is not that scared, although we do have a fear-based market. Even still, the fear gauge more puts to calls, and also 32 on the Richter scale. So this Matt Justice, Tackle Trading. Guys, if you enjoy the market recap, go ahead and post a comment or two over there on YouTube or over there at tackletrading.com. Always check out the podcast. This week we've got a cool podcast coming at you with the fantasy stock draft for you fantasy football nerds out there. And yes, I say that as one of myself. I have a dynasty league. I have a redraft league, so I do include myself in the fantasy nerd category. However, we're going to do one for stocks. We got 50 stocks on the list. Gino, Noah, myself, and Tim, we're going to be drafting stocks from a long-term investing perspective. And like Gino told me last night, we're going to be doing that going into a bear market and a earnings season. Thanks, Matt, for putting us on the hook. And that's what we do at Tackle Trading, guys. We're not shy of anything. We're going to put our names out there. Sometimes we're going to be right. Sometimes we're going to be wrong. But that's what it takes to change lives, one trade at a time, over there at tackletrain.com. If you like everything we're doing over there at Tackle Train, ladies and gentlemen, tell a friend, tell a family member about it. Let's get the good word of trading and investing spread around this amazing United States and the rest of the globe. And again, we're just so thankful for all of you guys to go out there every day and try to change your lives, getting out there, making trades and making long-term investments, taking control of your financial future. This is Matt Justice, Tackle Trading. I'm out.